All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in the Forex market. So without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If everybody can hear me loud and clear and see my screen, do me a huge favor. Drop me a one in the chat. Let me know that I've got everything working. I appreciate it. Joy, good morning to you. All right. Hey, so let's make sure that we never forget to start with a very, very strong foundation. And in the Forex trade room, we take massive action, meaning that we are accepting all possible losses before entering a trade, preparing you for any outcome. We want to be sure that we center ourselves in body, mind, and spirit, ensuring a balanced approach to trading, and that we always trust in our education, strategy, trading skills, and intuition. We want to always imagine our trade successfully materializing. We want to make sure that we obey our trading strategy, avoiding decisions based on greed or fear. And we want to never, ever look back or stop once our trade has commenced. I hope everybody has had an awesome, awesome week and that you are all ready to go. It's been a super busy week for me traveling to Chicago and was definitely blessed enough to have some great weather while traveling. Wasn't too cold at all. So that was a pretty good trip, but I am actually glad to be back here at home in Michigan. So let me get out of here and move right over right to our Forex factory. And yesterday we had the monetary policy decision for the UK, and they decided to hold rates, right, which is what was expected. So no change there. I think they did have three officials that actually was opting for a rate cut, but they held rates at 4.75%. Kind of, you know, hawkish in a sense, right? It's kind of the same type of scenario that we had coming out of the U.S. where moving forward, right, staying data dependent. Not so sure if you're going to see as many rate cuts moving into 2025, but we'll continue to see what happens there. Today, UK retail sales is down, right? So that even hit the front page. On Trading Economics, UK retail sales lower than expected, right? So that's one of the key fundamentals that we always pay attention to. So retail sales not as high, right? So that missed target. Also today, we've got an FOMC member speaking. Not sure what that is going to be that topic is going to be about or where they're speaking at. But 8:30, we've got retail sales data coming out of Canada. Core retail sales month over month, overall retail sales. And then today in the United States, right? Big report just before the holiday. Core PCE, which is the preferred gauge for inflation for the Federal Reserve. So if you don't know what it is, right? Sometimes we just like to review. It differs from the core CPI in that it only measures goods and services targeted towards and consumed by individuals. So it is the Federal Reserve's primary inflation measure. Inflation is important to currency valuation because rising prices lead to central bank to raise interest rates out of respect for their inflation containment mandate. Right. So we'll see. The forecast is 0.2%. We'll see if it stays within that. If it creeps up um, and comes in above what is forecasted. We know, right? We take a look at the VIX, right? Spiked big time after the Federal Reserve meeting, right? And we know we got the 25 basis point cut at the Federal Reserve meeting, but all the drama was around, right, the rhetoric during the meeting and what Chairman Powell had to say in regards to forward guidance, right? And so, hey, was looking at 100 basis points for the U.S. next year, now only possibly 50, right? So the VIX is up. It surged 74% to 27.62, so well above that 20% mark. And then this morning is at 25.58, right? And so the VIX is up, the dollar is up on the heels of the meeting, right? So we've got a little bit of a correction there this morning, but just a small correction on the dollar, but it's still holding, it's still sitting pretty high ahead of the PCE data. So we'll see what happens there. If we go over and we take a look at the S&P, right? This is opportunity, right, for us. Okay. All right, here we go. This is, well, whenever my charts load, here we go. Here on the daily. If we take a look at the S&P, we can see where we've gotten price to break down on this daily chart, right? So I can take this out on this trend line break, and that short-term move up. But we are moving down. So to us as traders, right? That's the US 30, I'm sorry. Let me back out to the S&P. Let's look at first. Then we'll go to the US 30. Here we go. So similar move, right? Charts are acting a little crazy. Okay, so we look at the S&P on the daily, and we can see that it is turning over. So, I was watching that 58.43 level to see if that was going to hold and form a swing low there, but it didn't. Right? It continued to move down. So now we're looking at this 57.85 level, and if it breaks that level, then we'll look to continue to move lower. But I'm cool with that, right? Because I'm looking for a low price to buy. So the lower, the better on the S&P. So just sitting on the sidelines right now. But we know anytime, right, we get a D extension that was hit on the previous daily fib, we've got a new AB boundary. We know there's a possibility that that price can turn over. We know that from a technical perspective. And then we got the fundamentals to come behind it with the Fed rate decision and then the rate statement, right? So we see the S&P turning over. So hey, don't get caught, right? We don't want to get caught. We're gonna let it do what it wants to do, all right? And so I was really watching that yesterday to see if that low was going to form, and it did. We pushed lower. So just continue to be patient, right, and let the market do what it wants to do. Some of you may be playing it short. Anybody short in the S&P right now, or is everybody kind of what's going on? Somebody talk to me. Hold on one second. Sorry about that. There we go. So everybody should have control over their microphone. But I'm kind of just sitting on the sideline, end of the year, right? Moving towards the end of December. So I'm kind of just letting the market play out there. What did let me see. Give me 1 second. All right. So that's where we are on the S&P. Any questions on that? So I'm just gonna let that continue to correct. Joy said you didn't take it. No, I was gonna let it fall, right? The better, the lower, the better, right? Eventually, it'll make that U-turn and back up. So that's where we are there. Moving on. Oh, so on my way back from out of town yesterday, and Ryan sent me a message, super excited, right? So Benit and Tyrone got allocations. That is huge. Benit, top 10, 110K, right? So I'm gonna drop you some. I'm gonna drop you some sevens, right? Since I'm back online today. Ryan definitely sent me that news yesterday, so congratulations to you on that. That is huge. That's a big deal. Super proud, man. Any tips or anything for the group, Beneath, regarding that? That made my day yesterday. Not sure if he's able to talk. Anyway, that is a big deal, and to be in the top 10 is huge. It's huge. So that makes us super proud. This is what we do it for. So anytime I get that type of news, man, I'm excited. I'm excited. That's excellent progress there. So keep up the good work. Look forward to continue, you know, feedback and updates on that. But that is a big deal. Top 10 Beneath and Tyrone, received an allocation as well. So this group is just continuing to progress in the right direction. So yep, yep. Appreciate you, man. So this is the US 30, right? So this one is a little bit more, prolonged to the downside, which is fine. We want these prices to continue to to correct and move down if we're looking for opportunity, right? So as long as we've got this VIX, right, it's up above the 20 level at 25 and a half, 25.6 or whatnot. So just continuing to be patient, let the market sort things out before I look to get back involved, right? So we had this circle low here that we're keeping an eye on, right? We did not double bottom and just continue to push down, right? So this one isn't too far from the buy zone. So let's continue to see what happens as we look to close out the year. And then here we are on the NAS 100, right? We hit both of those levels, right? That we were targeting at 21.6. We hit that 21.854. And as soon as we hit that 21.854 level, we started to make the move back to the downside. So I am good sitting in cash, being patient, letting the market do what it's. So this is I look forward to seeing at least another rally after the sell-off completes itself. I think I was reading, was I reading yesterday that revised GDP for the US came through, right? So it's been on par for like at 2.8, but the revised GDP came in at like 3.1 or something like that. So things are still rocking and rolling. We'll see what happens with the PCE today. But this was a a dip and a correction that was due. Right, the market had been running long for quite some time, so no surprises there on this US 30. I did go down to it's a bit out of town. I did not go down to any of the lower time frame plays on this to see if there was like any type of 80/20s or anything that had formed as a result. Let me see, and then tailed off. 'Cause I know a lot of you look to make those play those lower time frame 80/20s. So, but I did not know if there were any opportunities that I set up prior to the correction. Right. So that one almost hit that 118 zone before it tailed off. Right. So that's the 1 hour on the NAS 100 there. So yeah, deep correction. That one, if that continues to push lower, that one may take out the A on out. That's a pretty nice correction. So let's see what happens with the PCE data today to see if it's going to continue to push prices lower, uh, which it could for sure. It definitely could. Any questions on this NAS 100? Nope. All right, all right. The Nikkei tailed off, right? It's still just that was just choppy and range bound, right? So still on that upward trajectory, but um, but this has been trapped in a range for quite some time. So it gets going and then it turns back over. So nothing really do there. This UK 100 though, right? After that data, right? Huge impact there. So that one turned over, didn't continue to get long. So let me see where we are in the larger time frame. All of these are correcting now. UK held rates, right? Hawkish tone in regards to rate cuts moving into 2025. Right. So we'll see what happens. But let's go out to the higher time frame to get refocused. So end of the year, I'll definitely be redoing all of my charts, getting ready for the new year. And so let's see what we got. Yeah. Right. So we're kind of just range bound on this. Okay? Kind of just range bound. So we've got pull this off. And we got this what is it, 8,000 even coming in here. So I wonder how the market will react at this level. Okay. So we got a good reaction last time off that level, twice, acted as resistance before. So maybe a third time here, daily stochastics in the buy zone. So you know, we'll see if that level holds again, and maybe this is a range play. Watch for the swing low here, and if we do, maybe we start to move back higher off of this level. But I'm gonna keep the fibs off the daily right now, and just use our support and resistance level there. So this is one to watch out for in this UK 100 as it approaches that 8,000 level again. Wonder for the bounce, right? Maybe we go back to 81.15 at weekly level. Uh, yeah, that's moving sideways across the screen, middle of the screen, and so we'll leave it just like that, kind of in that range. So maybe you go down to your lower time frame, right? Those are the charts you like trading on. Maybe you go down to your lower time frames and draw your trend line, right, to the downside. You know, maybe you come down to your 1 hour, to your 4 hour, you know, see where we are in regards to the sequence to the downside. So we may run right into that extension, okay? Or on your 1 hour chart, and you're getting into these positions lower. I'm gonna focus on the daily, but some people like to get involved a lot sooner. You drop down to your 1 or your 4. Oops. Just let the price kind of do its thing. Let's work its way down. We'll take it. Pushed and made a lower low recent. Let it work itself out. Okay. Just like that. See if it finds support at that daily 8,000 level. I wouldn't do anything with it until then. Any questions on that? No. All righty. So that's that. Moving on, right? Taking a look. We got that. We got the NAS 100. Your Russell small caps, everything is correcting. So does that. I'd like to move up to the higher time frame, get the bigger picture. We can see here, right? These are starting to move back into the sweet spot. Okay. Nice run on the Russell, and now it's just correcting. That's all. Just like so. Coming to that daily 61.8 level. Stochastic is in the buy zone. So let's see what happens. I like the way these charts are looking as we look to close out the year and start a new. Right? We needed a good correction to happen in the market, and we're getting it. Okay, so just continuing. We know now on the daily where we are. So again, if you trade your lower charts, you know you want to move down, as we know we're in a daily buy zone, right? Draw your downtrend lines on your 1 hour, on your 4 hour, and just let it when it's time for it to reverse, it'll form a low and it'll start to reverse. Okay, if that's what it's meant to do, it'll do it. Right, but continue to be patient. So keep your eyes on the Russell 2000, right? As we're heading into our buy, we're in our buy zone now, and so let's see if that momentum starts to slow down, and if we start to get signs of a possible reversal in these zones. Right, look how deep that correction was on the last few. That was a deep correction there. Right, so take the circle. Look how far that moved down. Right. Do we go back? Do we end up at a 78% discount again? Not sure, but let's be willing to wait. Okay, the market's not telling us to buy that right now. Any questions on the Russell 2000? No.
I was just gonna say that the 15 minute has a 80-20
Okay. On the
Russell, yeah.
on the Russell, okay, on the 15. So let's drop down to the 15.
It's the sub-fib going down. So
This one right here.
yeah.
Okay. Let's see. So that one hit an extension. There. Right? Am I right? Is that the right one or am I wrong?
Yeah, that's the right one. And also like
Okay.
if you do the smart fib, it also has it on that last fib too.
Okay. Yep. So see if it right. See if it breaks trend line and wants to move back higher. After that, I appreciate it. All right. Appreciate you for that one. That's all. Thank you. All right. See if we can get that momentum to slow. See if we could get, price to reverse, move up a little bit higher. Okay? It's been falling for a while. At some point, that momentum will start to slow. Thanks for letting us know about that. All right. So, you know, candles it'll start to slow down. Your candles will get smaller, then eventually it'll reverse. Right. But I'm definitely looking for uh low prices, right? We like your fundamental data with the United States overall, right? GDP is still looking good. Employment numbers are looking good. Um, so I'm still looking for some upside in this market, right? We just got a shock, right? Because of again, because of the Fed rate statement. All right. Here we are on GR30, turning over, right? We hit that 19,966. None of us, none of us are surprised, right, by these moves to the downside. Look what just happened. We completed an ABCD wave. Right? It's the same thing playing out over and over again. Right? Completed the ABCD wave at that 19,966, which is why we had that target set. And now we've got a new AB boundary and prices turning over. Okay? Right? So it's just about having faith in what you do, right? Having confidence in what you see. This last player had a deep correction that didn't reverse out. Okay, so we want to see if we have an opportunity to get involved once it continues correct to the downside. All right, so that 19,966 target was hit, and now we look to play the game all over again. All right, moving up to our commodities. Right, look at oil moving down. Right, we got a major drop off. This is on the 1 hour. So that 80-20 play there worked really well. That's over now to the upside. Broke the trend line, but now we're moving back down. So we continue. That 71.44 level continues to be an issue, right? So I'm going to clear this up now since that 80-20 is done to the upside, and price is back pretty much range bound. So we can delete this now. So that short-term play is over, right? So we are able to take advantage of that, but we go back out. We still have that downside target, right? That looks like that it continues to want to chase on this daily, which is range bound. These are markups. Markups here. Up. Like, okay. So we again at that 71.44 level, we formed a swing high, right? That has been an issue at that level. So it's just looking like it wants to continue to range, right? And push lower. So we'll continue to uh, take advantage of the moves where we can, make plays, right? You can see that's a larger overall fib on the daily, but this is pretty much um, where we are right here in this. It just continues to bounce around. Any questions on oil? Reese, my bad, I missed that. You said you got the same look on S&P 500 30-minute. So we'll go back to that. Let me see. So drop all the way down to the 30-minute. we are, right? Sevens in the chat, right? Drop those trend lines, right? See if we can get some breaks. See if we can get price to reverse. Right? Appreciate you. Here we are, right? So that's another one, right? Where we've broken the key level, right? You see it tried to break it before it reversed, finally broke the level, right? Will you find buyers somewhere, right, in this zone? All right, so that's your S&P 30 minute. All right. Back up to commodities. So we were messing around down here in this 15-minute last time we were looking at it, but let me go way back up to our higher time. See what we got going on. So kind of just, I mean, short term we had a swing high, right? And we moved down, right? That's a pure, right? So when you zoom out, you see the big picture, right? Where we've had, right? Not the cleanest moves, but this was a double top there. That was a short play. I didn't get involved in it. I kind of took my eyes off of gold. But this here at that level was a double top. Okay. So you see where we've had this huge bearish candle, right? That then failed to break out to the downside. And then we moved up. Right. And so we double topped here and we shot down. So this one is pulling back now. Right. And this is versus the dollar. We know the dollar's been pretty strong, right, as of late. So still trying to see if that crown plays out. Yep, yep. So it's a lot going on around it. Especially yesterday with I mean not yesterday, the Fed rate statement, and then the guide is moving forward where we've been riding this the long term swing to the upside on gold all year because of the interest rate cuts. And now, you know, instead of 100 basis points next year, they're only looking at the possibility of 2 rate cuts. Now that could change, right? We know these situations can change, but we saw the market react to that change, right? So 50 less basis points next year is the projection instead of a full 100. And the market didn't like that. And but now and then you just had uh, the Bank of England hold rates and took a more hawkish tone, uh, looking into 2025 as well. I mean, 2025 as well. So, gold will be interesting, and at the same time, you got the volatility index up. So it'll be interesting to see if it actually plays out. My question now is, with where this daily stochastic is this going to form a low and continue to rally, push up higher again? Or is this just a temporary pullback? What I'm going to do is,
Hey, Benny,
yeah,
read an article the other day. By being the end of the year, you have your Chinese and your Indian cultural celebration where
hmm
they're going to be, gold is consistent in their rituals and stuff. So it might be a small rally.
all right. Appreciate the update on that. Drop you some sevens. I never looked at that as a possibility. That's pretty cool to know. When I know they have those celebrations, but I never, thought about it as it relates to gold. So we'll see. We'll see what happens. Let's see if we got anything to play here, right? So this that's quite interesting. I'm gonna have to read up on it. Did you post that out? Did you post that or no? Okay, let me see.
I don't know if I posted that one. I think I did.
You did? Yeah, I'll look it up. Oh, close out. I'm gonna read up. I want to read up. But here we are on the one. Okay. Okay. So let's see with this markup here. Let's see what happens with this PCE data that comes out for the U.S. this on this 1 hour chart. Do we break back below? Right, it's 25.99. I think that's really that 2600. That's that 2600 level there. So do we get back below that? If we close below that, then probably gonna continue to push lower. We got a 61.8. So then that would lead us to say, hey, we continue to push lower 25.39 at the extension on gold. So that's a possible play. Break back below that 2600. So keep your eyes on that if you're trading gold, right? Be a good short term play. Mm-hmm. So that's that on gold. Moving into looking at silver, right? We had to move it to the upside, then we collapsed, moved down, right? We got concerns. That makes sense. So we're pushing lower within that AB boundary. So that double bottom only held temporarily. So we got one more drive down, right? Now we're at a weekly level. So this is the daily chart. So let's continue to see what happens, right? And this has kind of been the move, ever since we had that $34 target and it hit it, and now it comes a period of time where we correct. Okay. And so that's that on silver. Moving down that gas though, right? Hey, hey everybody, right? Still moving to the upside. So I hope some of you are still involved in the natural gas play long. Because that's looking good right now. Anybody still holding natural gas? Can we get that $4.18 level? Right? Above the 50, above the 200, above the cloud. Made a beautiful U-turn. Joy, yes, sir. All right, all right. Good job. Good job, right? So this one is one that we had marked up to continue long, and it is doing just that. Right. So that's a beautiful natural gas play there. That's a monthly level that we just broke above, where we're kind of consolidating right now. So hey, we look for continued momentum to the upside on that. So that is beautiful. That's a GDX play. That's a gold ETF. So what? Hey, so I covered. I want to make sure we got those. What do you guys want to look at, right? As we look to finish up here over the next 15 minutes. Any particular pairs that you all have your eyes on as we move into the end of the year? No? So, yeah, the JPY basket. So I am looking to continue long, right, with the yen, stay held rate. So we've got a correction going on, but it was due. I'm checking this pound yen play. You guys remember we talked about this when it was just breaking a cloud, right? And so it has since continued to do its thing. Right? So you remember we had the little lesson on, hey, you could take it in the sweet spots, right? Or you could wait for the cloud to break. Maybe that's your confirmation is you want to see a cloud break and you give up, right? You don't worry about making these gains here, which that was a lot at that point in time, right? It was over 400 pips just to break the cloud. But hey, if you don't take that, that's okay because from that point, it went 600 pips from the break from the break of the cloud, and now we're correcting, right? Which is we know the market moves in waves, but from that cloud break, it went up another 600 pips. So if you use the cloud as your confirmation, to get into these plays, it's okay because you still can, do pretty good, especially if you, right? If you're saying, hey, once it breaks that cloud, I'm gonna look to ride it to the D extension, then that becomes major, right? Because that's almost 1,000 pips to the D extension. So if you want to be a little bit more conservative and wait for, cloud breaks and things like that, that's fine too. But once you get in, you just expect it to run, right? So think about that. Like the one chart I have posted, right? Hey, just put a buck on it and let it go, right? Hey, I mean, if you traded that at $1 on a cloud break, and it's all relative to the size of your account and your risk, right? I'm just using the dollar because that's just a nice simple number, right? And you let that ride, that's $1,000. Right? If it makes it to that extension, that's $1,000. Right? So that's the GJ again. You know, Ryan and I have been super skeptical, right, with the Bank of Japan, saying that a rate hike is near, but then they held again, right? Even though I want to say where was that this morning? Oh yeah, Japan inflation rate hits a 3-month high. They held rates. So you just learn your lessons over the years. If you're gonna do something, with some central banks, if they're gonna do it, they're gonna have to show you, right? Because a lot of times they're just blowing smoke for some of the central banks. So continue to look long there. The euro yen, right? Continue to move long for the most part, right? Off that low that we had from a while ago, right? Just continue to push long. That's a huge pullback to retest and a nice bullish candle there. So what that's looking like on our lower time frames is that we actually got on this fib that extension to be hit. So moving to the upside, I look for that to continue. If you're looking to get involved, there's an opportunity here, possibly on the 1 hour, so that we can get, a larger correction to the downside, and then a continuation long. So that's an opportunity there. Look at this NCDJ. Yeah, I didn't imagine we're gonna get much there because that's not too strong. So I was kind of just ranging, right? I've got it set up as a long, but it's kind of just ranging. Okay, we did break the cloud again, kind of just ranging there. So just continue to watch the 50 and the 200 to see if price can get above that. Maybe something will drive it to maybe gain some momentum. But that out of your yen pairs, that one I don't like as much. Our dollar yen just continuing to run, right? So this one, you know, want to see the 160, right? I want to see that dollar yen move back to 160, right? So I'll put that in. Right. 160, okay? Right before that extension and a daily resistance level. So ever since we drew that breakout a while ago now, as soon as it broke out of there and got above that daily level, it just continued to run, right? That's easy money there. Okay. Long. Like that's way overextended. That should be a new fib at this point. It'll catch up. Let me see if I can get to pop in. So here's our low, right? So oh, I see. So we got the spike higher. So it should be something like that. And your yours at 1100 pips. Which one was that, Joy? I missed that.
1 hour for you, Jay.
For you, Jay? Ooh, my goodness. My goodness. Dropping sevens all this morning. Got a lot of good news going on in this group. Great job. Great work. Great work. All right. We'll see what happens. We'll see what happens with the PCE data if it creates a dip. Because that dollar's been running long. But hey, when the more you learn the fundamentals, the more confident you get when it comes to staying in trades and holding your positions because nothing's really changing. Now we know the VIX crept up over 20. It's at it spiked to 27, is at 25.6 or something like that we saw earlier with the VIX, right? So your sentiment, your risk on, risk off scenarios, we know that it can cause the yen to strengthen. But what we're seeing, the safe haven that we did see strengthen as a result of that volatility was the Swiss franc, right? That was the acting safe haven. If you look at some of your Swiss crosses, you'll see that. Okay, so didn't really so much kick in on the yen side, but on the Swiss franc side it did. Um, so right, extension hit. Look, now we just need, can we get a correction right around that 80-20 zone? Can we get it to move back to a low price where you can either add to your position or look to get involved? Like so. Just stay disciplined to the waves. Stay disciplined to your daily swing highs and swing lows, right? And take it from. But I definitely think we could see 160, and then we'll be hearing about intervention talks from the Bank of Japan as it gets closer to that. But that's that there. This dollar. I wanted to take a look at this dollar CAD. Right, this was the one that I actually posted. One that is just continuing to run closer, right? So that 145 level, look at that. So we don't care what it looks like on its way there. When we got these longer term swings in. We just want to see it get there. And that's why you don't have to put the house on these trades because I mean that's a lot of pips, right? Off that low to where you are now, right? It's up almost 1,300 pips, right? Not even at the extension. And so that's a long running play. This is the 1 hour chart where we can see here was that last fib. Look at that. The U-turn where we had the TP set 142 that got hit. It just accelerated this fib here. We didn't really get a pullback. And now we've got a nice correction here. So maybe we'll see how this is tracking because you've got a low, you've got a higher high, we've got a higher low. So do we stay above this level? And then do we push to a higher high? There's that daily extension there. So we're not too far from that on the UCAD. Let's look at this dollar Swissy. Since we were just talking about the Swiss franc. So you see the correction. So it's been on a tear. Okay. It's been on a tear here, right? Look at this. The higher time frame breakouts are just super special when it happens. Okay. So you can see where that broke out and accelerated, right? We've been moving higher, but at some point you get a correction, right? And that's what we're seeing now. Okay, you get a correction. We're above the 50, above the 200. I'll put on my default template. All right, clarity. And so look, last extension, we made it. See, we got the pullback, ABCD wave, bang, hit it. Now we're correcting. Now we want to do the same thing again. It's a very simple concept here in the group. Okay, continue to watch the fundamentals. These corrections put us in position. Okay, so what is the daily level here? That's what we want to pay attention to see if we break below this level. $89.14, right? So if we get below that, see if we can push lower, okay, and then look for an opportunity to buy. Again, we want to keep our eyes on our dollar pairs as we do have the PCE data coming through today at 8:30. And also retail sales for Canada. We also have revised U of M consumer sentiment numbers coming out. Okay, so on the Friday, we can see some volatility with the dollar for sure. Any questions on this dollar Swiss? All right. Oh, I know I wanted to show everybody this Bitcoin play. We're getting that correction. We get that 100,000 right in that 80-20 zone. Are we on it? Or are we on it? Right. So this is a daily. We know what this is. Swing high. Right. Right. Look at that. Right. Gotta love it. Hold that level. We'll push lower. But that's a clean 80-20. Move it down. Right. And so if you want to buy, hey, let's just continue to let it drop. Okay. So it's all good. Here we are on the 4. Here's that 90, 80, 88, 98, 85 level. Do we hold? Will that be a double bottom or will it break and move lower and take out this? Let's see. Where are the buyers? But it's amazing how we can use the fibs and find those key levels where that sell-off.
I would say probably looking at the daily, you could see the pullback and then continue down.
You think a pullback and a continuation down or eventually break that level?
Yeah.
That'd be fine with me.
Look at by 80, like a what you call it, a head and shoulder, right? So pull down to the rope and then pull back up.
Yeah, let's see. Let's see. Let's see. What it's due, right? Ever since Joy's call on that breakout, it's been running pretty strong. So it's due. It's due. Nothing goes up forever. Right? Here's that 1 hour that I've been looking at. All right, so we've got a clean trend line break there on the 1. This level is going to be key. Who's watching that level? Right? Who's watching that level? What Bitcoin whale is watching that level? See what happens. See what happens. So that's Bitcoin. Take a look at this is the ETF, right? 80-20. Right? Not playing any games in this group, right? We got that $27 take profit hit, extension hit, and now we're moving down. Right on target. Right on target. And then I wanted to take a look at XRP. Look at that. Right? That broke out and then failed. This, right, gives you an opportunity to buy some, right? So let me move up to a daily chart. Yep. So so thanks, Joy. Make sure I read this later. All right. So this is our higher time frame. Look. It's XRP. Set a key level right now, too. There we go. Let it fall. I'll just buy more of it. Okay? Just buy more of it. Any questions or anything that we covered today? No. Posted another article too. Tyrone, congratulations. Hold on, I didn't even. Hold on 1 second. Yeah. Well, I got too much stuff going on. The chat. Did you see my question? Can you talk briefly about the importance of trading charts individually, not alone? Decision is something I've been struggling with. Yeah, it just because I used to get like I just think it's just something over time that the way I've evolved, like the longer you stay in, the more you start to realize things, and I just I got away from that because they don't always correlate. You know what I mean? I didn't see the consistencies in the correlations. There are some, right? Typically, like a lot of times, like oftentimes you'll see if the dollar is super strong, you'll see a correction in the stock market, right? It's moving the opposite way. But that also depends on why the dollar is strong or weak, because you've seen it at times, right, Reese, where the dollar could be strong. Maybe it's because of the GDP, right, and the way investors interpret the GDP data for the United States, and so the stock market could be strong at the same time that the dollar is strong because they see that as high growth, the health of the economy is good. So over time, what I saw is that I try to uh I try to trade based on data that I know is has a high percentage chance of being consistent, and correlations just weren't consistent enough for me to say I'm gonna hang my hat on that, and I'm gonna put my money on that correlation playing out a high percentage of the time, because there's few that do, but a lot of them don't. And that's like, and so it's like I needed to eliminate some filters, because I used to be all about that stuff. Just like at some point when you start out, a lot of us, the way we're introduced to this game, how uh we're all about uh indicators and things like that. And then the more experience you get, the less and less indicators you have on your chart. You know, um, so it's just something that over time, it's just kind of like me evolving as a trader. A lot of those common things that I've noticed that especially newer traders, when you just start out, tend to focus on, they didn't hold water. And so I kind of just eliminated those. you know um I it get like I don't use it as a primary basis of my decision making, uh but it helps me to understand when I see it price move in a certain direction on a particular pair. It may help me to understand, like, oh, I know why, because this is doing that. But it's not a primary confirmation for me anymore. Should I say it? I think that's correct. I don't use it as a primary confirmation uh, for my correlations, because um they just weren't playing out as much, you know. Um, and so that's why I kind of pushed it to the side. So because I used to look heavily on that. Oh, well, this is moving in this direction, so that it must mean that this. Another thing was timing. Like, just because one pair or one asset is moving in this direction now doesn't necessarily mean that the other asset that I think should correlate will start to move at that exact time. So it wasn't even making sense in regards to timing oftentimes, you know. And then what would happen is sometimes I would get I would get stuck, like holding on to that idea, like, oh well, gold is moving up, so this should be moving down, and then it never moved down. Like, so I was like, hold on, man. Like, this doesn't seem to be consistent enough for me to hang my hat on that and to put my money on the line. So I kind of just moved away from it in a lot. Especially now. I know some things, like, I don't know if you necessarily call it a correlation, but a key indicator. Like, I know when that VIX is up above that 20, you know, typically I'm seeing that a correction in the market happen, and until it gets back below that, I'm really not even thinking about making a move. So things like that I still pay attention to, but that's just about that's just about it. Yeah, but some of those trading environment norms, I just realized, like, they just don't hold up. They just don't. And if they did, I'm sorry, you guys didn't have control of it. If they had a lot of people in control of it. Oh, my bad. If they did, a lot of these folks on the internet and YouTube would be on they'd have been on Wall Street a long time ago making a ton of money. It just don't make sense. A lot of the ideas that came about in the trading space, I think, came as people were trying to perfect their timing on lower time frame charts, because everybody was trying to flip money so fast. So everybody was using all these indicators and all of these things and correlations to try to build confidence, to put the house on a trade to flip money fast. And when you're over leveraged, that time has got to be perfect. as this going to be disaster. So I think just psychologically, people were just coming up with so many strategies and things to try to risk the maximum amount of money, you know, and try to, you know, time the market to where they could eliminate the risk at the same time. So it was really like they were trying to have their cake and eat it too. And it really doesn't, that really doesn't exist. It doesn't, you know. So thanks, Joy, for posting those articles. It really doesn't. Which is why, like, I take the approach to the markets that I take now. And I think that's why we say in there, we say all the time, like, if you hang in there long enough and you go through all those things, you weather the storm, you'll start to have a much clearer vision on the direction in which you need and how you need to go and where you need to head as a trader. You know, but it takes time. It's almost like you just gotta, it's almost like when I was young, right? You know, my dad would tell me stuff and it's just like, man, I just had to see it for myself. I didn't necessarily listen to him all the time, even though he was trying to tell me because he had been through the same thing. But sometimes you really just need to experience some things for yourself to know, like, okay, this it doesn't work, you know. So, but that's my take on correlations and things. You know, so that's that would be my advice in regards. Real quick, yeah, we'll take a look at Tesla the next time because I thought I had that in mind. I don't know why I thought I had that in. Oh, it's in my consumer. In my consumer. That's Tesla. We just hit a daily extension now, so we got some corrective action. We'll drop down to the lower time frames next time and see exactly where it is on the lower time frames. But on the daily, Tesla just hit a D extension at 467.80. So that's why we're seeing it drop off. My man Elon is talking about making all these cuts to the federal budget, but I bet you he's not gonna cut none of that money he's getting from the federal government. So we'll see how that plays out as we're looking at a government. We're on the brink of another government shutdown, partly because of him. So we got a man who is the largest welfare recipient of government subsidies telling everybody else that they need to cut. So we'll see how that goes. Somebody was saying something. I'm sorry.
I was waiting. I'm sorry. I was just about to type. I'm like, people should be pulling out of Tesla now because that man just cut $190 million off child care cancer research.
Yeah.
And which that also falls under for sickle cell research, and a couple of other studies. And he just influenced, like, yeah, cut this. And they cut 190 million from that research program.
Yeah. 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 And his stock is hitting all-time highs, you know. And I mean, you're talking about a man that's come in and really pimped the US government. You know, so now it's a case where we don't know who's going to be president, him or Trump. So
no, they calling him President Trump. No, they saying President Musk and Vice President Trump, and we don't know what JD stand. That's the narrative for today.
yeah, so it's going to be quite interesting. I got my popcorn ready. I'm just going to sit back and watch it all play out. That's my take and decide which way I'm going to trade the market. That's how I'm going to look at it. But all right, everybody, appreciate you all being here. Spending time with us. Congratulations, Beneath Tyrone. Huge. That is a big deal. A big deal. I want to talk more about that during tomorrow's weekly ritual session. Super proud of everybody in this group. Proud of you two. That is a major, major milestone and accomplishment. With that being said, I will see everybody tomorrow morning, 7 a.m. Eastern Standard Time for the Forex weekly ritual. That'll be a pretty good one as we look at the end of the year and going into next year. It'd be good to get these charts cleaned up. So, hey, always remember, don't just count your pips, but indeed count your blessings. See everybody